Hi, in this video I'm going to talk to you about a lot of questions we have from clients, which is usually about whether a family home should be put into a trust. And usually that question comes from a very understandable place. People want to protect their family home. It might be to do with inheritance tax mitigation. It may do to try and reduce the opportunity that care home fees can be paid from the property. All sensible concerns, but here's the important bit. Putting your home into trust is not a magic fix. It can cause significant tax problems, administration burden, family complications, and also a false sense of security. So in this video, I'm just going to talk to you about what the kind of common pitfalls, not from a legal sense, but from a tax sense. And any legal advice would have to obviously take it from a solicitor. There was a recent case which was only released last week about what used to be known as a home loan scheme, which were very popular in the early 2000s. This scheme was put in place in 2003 and the lady didn't die until 2011, and they only just finished the court case on this, where HMRC actually lost. So that planning did work, but the judge was keen to say that that planning would not work now. So you might hear a lot of things in the press to say, home loan scheme works, we need to do this now. That's very specific, not quite, there was a trust involved, but that case is old law, which is completely changed in legislation and would not work now, despite the fact that HMRC lost that recent case just because it was historic law. So why do people think that putting a house into a trust is a good idea? Three main reasons. The first one, inheritance tax. People may think, well, that's not no longer mine, I've put it into a trust, they can't touch it from inheritance tax. Second, care home fees. The council can't touch it, it's not mine. And third, kind of family protection. You may have blended family, you could have second marriages, it could be a divorce which has happened, and you want to protect your asset from certain people within the family line, which you may think this is the right thing to do. Obviously, that's more of a legal sense, which we're not going to really cover in this. But there's always have to think about the tax planning. So first question is, what is a trust? So a trust is just a separate legal entity. The trustee is holding something on behalf of the beneficiaries, and it's not in that legal person's name, so it signs over. So the beneficiaries are someone who can benefit from that. So this is the biggest problem you might see from a tax sense of people using trusts for homes. Transferring something into a trust can trigger inheritance tax, it can trigger capital gains tax, unlikely in a house if it was your main residence, but there are still things there. Most importantly, from a tax sense, it's an inheritance tax, and this is where the gifts with reservation of benefit rules come into play. So you give something away, or even sell it, but still retain the benefit. You haven't given it away for inheritance tax purposes, so it still sits in your estate. You've not started that 7-year clock. Now, you could in theory pay market rent if you were to transfer it to a trust or to a person and still live in there to help that IHT mitigation, but you're going to have to pay the rent. It's going to be on taxable on somewhere, and you may be shifting something from an inheritance tax environment where it's potentially taxable at 40% into an area where it's taxed on income tax at 40%. So overall, there's no saving. So it can get messy, and usually from a tax sense, that's one big reason why you would not do it. Also, in terms of trusts, people think, oh, it's in a trust, it's completely exempt from inheritance tax. Well, it's not. Potentially, there's entry charges into trusts at 20% of the value. Every 10 years, there's a potential 6% charge of the value in the property of the trust. So just because in a trust, people think in a trust, exempt from inheritance tax, not necessarily the case. Care home fees. Most of the issue, people talk to us about a lot about this. Now, this is not really a tax issue, it's absolutely more of a legal sense, but in what we've seen in practice is that councils who will make that decision whether someone goes into care and whether they have to use their home to pay for those fees, you have to look at whether there's a deprivation of assets, what they've done, and they may see that putting a home into trust as something when you've not really given it away, they're still going to ask for care home fees. So they have to be very careful, and it's not some kind of silver bullet to protect you paying care home fees in the future. Again, legal advice will have to be sought if you are really considering this, but in our experience and what we've seen in practice, it doesn't work. There are instances, few and far between, of when this can be beneficial of putting your house in trust, and it's usually if it's on the first death of a married couple, where potentially you could put half of the house into a trust for the next generation, which may help some of these issues. But this has to be looked at in the whole round in terms of your individual assets, your spouse's individual assets, and everything else. It's not sort of, oh, definitely do this. It's looking at everything in the round from an IPT sense and thinking of where things need to go in the most tax efficient manner. So again, that brings us on to, obviously, in most people's estates, the house is the most valuable asset and they want to do something about it. And if you've got an inheritance tax problem, that might be driving it because house prices are going up. You may have no mortgage on the property, so it's thinking about all those things. But you really have to take a step back and think, especially for business owners as well. You may have business shares, you might have your property, you might have pensions, you might have other investments, and it's looking at everything in the round, try and appreciate what inheritance tax liability you may have and what options you may have to either reduce that or freeze it, because it could be that you have an inheritance tax problem because you've got a substantial estate, and then the question is, well, we just don't want to make that even worse, or is there any ways we can do to help keep that liability steady and manageable? So I think the question never to be, can I put my house into trust to avoid inheritance tax? I think it has to be a broader question that people need to ask, and not to think that there's a silver bullet to completely help your inheritance tax position. So in conclusion on this, the general rule of thumb is that it's not a great idea to put a family home, if you continue to live there, into a trust structure. It can cause headaches and it can cause potential tax liabilities, which aren't great and will get expensive over time. And ultimately, it just might not work for inheritance tax and also care home fees as well. So you really have to be careful. It's getting proper advice from a qualified solicitor, it's getting the proper tax advice from someone like ourselves to make sure all bases are covered. But in most cases, it's not going to be worthwhile.